When they do that first overnight reset, boom, the exit strategy there is to convert as much gold as you need to into whatever the currency of the realm happens to be, whether it's dollars or it's CBDCs or it's stable coins or whatever it happens to be. Convert enough gold to, bam, pay that mortgage off. So that's another part of the exit strategy. I've been talking a lot about what's happening out there with the debasement trade. And so I want you to imagine, if you will, the global economy being like a giant boat. And for many years, governments have been patching holes with duct tape in the economy and borrowing more money and printing cash to keep those things afloat. But frankly, now the boat's starting to leak faster and faster than they can fix it. So some smart passengers like Ray Dalio, Ken Griffin, these are big kahunas, they're grabbing golden life jackets. Why? Because they think that the boat's money system, the dollars and the government bonds, might not hold up much longer. And if the crew keeps ignoring the leaks, well, odds are more weight, more debt, that boat is sinking. Even big institutions like Canada's pension board, well, they're worried and they're saying, hey, maybe treasuries aren't the safe spot that they used to be. Oh, shocking. They were never, but I guess with a lower level of debt that could work. So what are people doing? Well, they've been jumping toward gold and toward silver. Physical. The physical markets are taking over the paper markets. Now, I know what's happening in the paper markets today. Of course, everything is severely stretched. And right now, we are on risk on. But quite honestly, with the US Treasuries, well, they aren't the unimpeachable safe harbor asset that they were once, well, at least that they appeared to be. And it's a phenomenon repeated across the bond markets all over the world. Those long-term bonds, we've talked about this quite a lot. And as you can see, the percentage of foreign officials' share of outstanding treasuries, we've talked about this over and over again. They've dropped from over, well, I think in 2008, we were at 45%, and now we're down to like 15%. Hence the stable coins to create a new false market. And what about gold? Well, global central bankers have been loading up on gold, and who knows more about what they're doing, about that devaluation trade. That's the central banker's job, is to devalue the currency, but to do it in a way that you don't notice. But now we're at the end. And so things that once worked no longer work. And when you see these titles, the debasement trade, what they're really telling you is that it's time, that they're telling you that this is the end of the system. The fact that they're so darn blatant about it. And why aren't people more up in arms? I suppose that's what's showing in the spot prices on both gold and silver. But I'm going to tell you, the physical markets are now overwhelming the paper markets. We're in the most interesting place that we could ever be. And we need to talk about this because seriously, the fact that they are touting the debasement trade, and we've got headlines around it, the debasement trade is ripping across world markets because all of the global central bankers, they have no tools left. It's just more debasement. And the more that happens, the faster the inflation, the less confidence that the public has, both in the markets and in those that are leading the markets. And what's the goal here? The goal is to make this transfer into a surveillance system without you complaining. without you realizing that that's what's happened. But you're here, so I know that you do realize it. And I know that over time, you've seen me over and over and over again show you how silver protects your ability to buy the same goods and services over time. Gold actually expands it. And gold is outperforming every single fiat currency. Every single one of these, physical gold, physical silver, is outperforming and has been for a very long time, going all the way back to 2000. Deb Warner asks, Lynette, can you give a broad overview of what the exit strategy will look like for most folks? I appreciate and respect your advice. Now, it depends on, the strategy is built in layers from sustaining your standard of living. So the exit strategy actually in there is to have a level of cash, maybe a level of gold backs, maybe a level of glint or some kind of electronic convertible gold. You must, or redeemable gold, you must have the ability to pull it out or I cannot support it. And actually that's the kind of gold and silver that you use up as you need to sustain your standard of living. So that's one of the parts. And remember, this is built in layers, which means that there are layers in each piece of the exit strategy. We also want to protect the fiat money wealth or whatever wealth you've managed to accumulate. So real estate is a great example of that. And let's say you're sitting on a mortgage. Well, part of the exit strategy is the ability to, when they do that first overnight reset, and I'm going to show you this in more depth, but when they do that first overnight reset, boom, the exit strategy there is to convert as much gold as you need to into whatever the currency of the realm happens to be, whether it's dollars or it's CBDCs or it's stable coins or whatever it happens to be. Convert enough gold to, bam, pay that mortgage off. So that's another part of the exit strategy. Then, as we are moving further through this trend cycle, and those income-producing assets that right now have been targeted for reflation, so they're at absolute nosebleed levels, plus those zombie corporations that really should not be existing but have been kept alive for a variety of reasons that we've talked about in the past. We need all of that to wash out, because in the real world, things always go from undervaluate in the tangible asset world, I should say. From undervaluation to fair valuation to overvaluation to fair valuation to undervaluation. That is a constant movement. So right now, they're at the extreme because people watch the markets go up, whether they're real estate or stocks or crypto or whatever it is, and they go, oh, that's good. But that's not the real trend. The real trend is the value of the currency going down. Having said that, when all of that inflation is burned out, so you have them going from here down to an undervaluation level, and we see who survives and what is exactly happening in there, well, if you have the gold, it holds your purchasing power intact. Actually, this is more accurate. It holds your purchasing power intact. And so then it will be time to exit some of this, and depending upon what we're looking at, whether it's rights or income producing real estate or even dividend paying stocks that have actually survived this, etc. Then we start to exit out of this and convert into those income producing assets when they are severely undervalued. And in essence, as an overview, that's the exit strategy of when you get out. But the other part of the exit strategy is making sure that when you use your barterable portfolio, remember, this is your principal. You're using up your principal. When you're converting your gold into fiat to pay off that mortgage, again, you're using up your principal. When you are using your gold to convert into income producing assets, again, you're using up your principal. But that doesn't do you very well when we're in on the other side of this transition. So a big key component of the strategy is the principal that you are likely to use up as we are going through this trend cycle gets recouped. So that by the end of it, when we're in the new system, and believe me, we are not going away after we go into the new system, because everybody should always have a foundation of sound money in their portfolio to protect anything else they want to do. So we'll evolve as you guys evolve, but that's a big part of the exit strategy, is to recoup any of the principal that we use, any taxes, because taxation and fees and penalties and fines, these are tools that the governments use to keep you in the system and prevent you. I mean, if you read their documentation when they're setting things up, what do they say? They say, well, how much of a fee, like when they changed the money markets, it was how much of a fee do we need to charge so that when people see that, they go, oh, no, I'll just leave it there. That's the main focus, not on protecting your wealth and your assets. But what do they need to charge you? It's the same thing with IRAs. People go, oh, I don't want to pay those taxes. Well, you're always going to pay those taxes. You can decide when and how you're going to pay them, or the government can decide when and how you're going to pay them. That's up to you. But no matter when you choose to do it, we want to make sure that whatever fiat money wealth you've accumulated, if that goes to zero, it doesn't impact you. What if I'm right? What if I'm wrong? This whole strategy is about it not really mattering if you're right or wrong, because we're going to cover every single base. So that is a general overview. I will be getting a bit more specific than that and doing it with images and pictures, etc. And Brandon A. asks, a big key component of the strategy is the principle to own Bitcoin. Well, Brandon, I mean, I'm glad that you have confidence that it's going to survive this test, and you could be absolutely right. It very well could, because it certainly appears that Wall Street has adopted this new tool to make money. But I'm not really convinced. And I've lived through, in the 60s and in the 70s, I lived through these transitions. So here's the reality. What can you convert Bitcoin back into? Dollars, euros, yen, what have you. So all of this stuff that you can only convert back into fiat will go the way of the fiat. They can make the markets look like they're going up. Is that why you're buying Bitcoin? Because it's going up? I can see some of the functionality for those that are in power, but it doesn't have the broadest base of buyer. It has a buyer in one place. So if there's a problem in that place, you're going to have a problem. With physical gold and silver, and we're seeing this happen right now, where the physical markets are starting to take control over the paper markets. I don't know if this is really going to stick yet. We're going to have to wait and see. Just like you don't really know if Bitcoin is going to stick and have value. Let it run the test. When it runs the test, as long as you have purchasing power value intact, you'll be able to buy it a whole lot cheaper if it passes the test. And nobody knows the answer to that at this point, but we will find out. And even if you do choose to hold Bitcoin, that's fine. You just make sure you're properly diversified. You got this intangible over here that they like to depict like a gold coin. It's not a gold coin. And you know, I was playing solitaire, and you know, I don't have the ads turned off on the solitaire, so there's all these ads that come up. And what are they always showing you? Lots of gold coins, aren't they? Why? Because we humans know in the back of our minds, even though we've been trained away from it, that real gold, physical gold, is real money. That's why they depict all these cryptocurrencies when they're trying to give them a physical presence. There's a reason why they make them look like gold. Think about that. There might be a little bit of education in there for you. So everybody must do what they're comfortable doing regardless of what anybody says, because frankly, you're the one that's going to live the consequences of whatever choices you make, to the good, to the bad, to the neutral. It doesn't really matter. But the more diversified, properly diversified you are, the chances of you weathering that storm in a positive way are much higher than if you have all your eggs in one basket.